I'd like to call this meeting to order. Good morning and welcome to the March 3rd, 2026 regularly scheduled meeting of the House Committee on Finance. Would the clerk please take attendance?
Chair Tisdel.
Here.
Representatives Frisbie.
Here.
Vanderwall.
Present.
Leitner.
Here.
Martin.
Here.
Posthumous.
Here.
Alexander.
Here.
Aragona.
Here.
Schuette.
Okay.
Hoskins.
Here.
Carter. Neely.
Here.
Breen. Young.
Here.
Pies. Mr. Chair, you have 11 members present. You do have a quorum.
Thank you very much. Vice Chair Hoskins moves to adopt the minutes from December 16th. No objections. That passes unanimously. We're going to hold off on the vote and move right to testimony on 5484. At ease. So you don't steal my pen.
Let the mic out again. Back in order, and turn it over to Representative Tisdel, Chair Tisdel.
Thank you, Vice Chair Frisbie. With me today is Elizabeth Potocki and Bob Doyle from the Michigan CPA Association. So 5484. First, let me apologize. In the House Fiscal Agency analysis was twice as long as the bill. So obviously there are some moving parts here, but very simply, a pass-through entity, that could be an S-corp, an LLC, a partnership, a sole proprietorship, they can be taxed differently with the exact same revenue profile as a C corporation, just by how the rules handling the apportionment of taxable sales that occur outside of the state of Michigan. So all we're trying to do is apply the same simplified or simpler apportionment rules for C corporations to pass-through entities. That's it. Again, the way it stands now, you could have identical profiles, a pass-through entity or a C corp, and end up having different taxable values for income tax purposes. And that's as far as I can really get into it. And so that's why I have two accountants here with me today. And instrumental in getting this change written into law was Elizabeth Potocki from Doran Mayhew CPAs in Grand Rapids, correct?
Correct. Headquarters in Troy.
Or Bob, you want to start?
Sure, I'll get us started. Thank you, Mr. Chair, members of the committee. Thank you for the opportunity to speak today on behalf of the Michigan Association of CPAs and the more than 15,000 members we serve across the state. My name is Bob Doyle, and I serve as president and CEO of the association. So we strongly support House Bill 5484, a bill designed to provide a much-needed modernization of Michigan's tax code. The Income Tax Act was written in 1967. This was long before pass-through entities became the primary way entrepreneurs structure their businesses. Because of that, individual owners of partnerships, S corporations, and LLCs are taxed under rules that no longer reflect how businesses operate today. Right now, two businesses doing the exact same work can face very different Michigan tax burdens solely because one is taxed on an individual income tax return and one is taxed on a corporate income tax return. That disparity shows up most clearly in how sales are sourced both for tangible goods and for services, and it often results in Michigan-based entrepreneurs paying more tax than their corporate counterparts. House Bill 5484 addresses this inequity by aligning the apportionment rules for individuals with the rules already used for C Corps. This change creates consistency, fairness, and a more competitive environment for Michigan businesses that sell across state lines. It also simplifies compliance and brings Michigan in line with neighboring states that have already modernized their laws. At this point, I'd like to turn it over to Elizabeth Pataki, as was mentioned from Dora Mayhew, who will speak to more of the technical details.
Thank you, Bob, and thank you, Representative Tisdel and members of the Finance Committee, for allowing me to speak with you today. House Bill 5484 updates the Michigan Income Tax Act in 3 key ways: the elimination of throwback sales, the movement to market-based sourcing of services, and the clarification of how the sale of a flow-through entity will be taxed. This bill will only impact how these items are treated when the income is ultimately taxed on an individual's return or on a trust income tax return. Therefore, I'm going to collectively refer to these as a taxpayer or an owner throughout my discussion. I'll explain what each of these phrases mean and welcome any questions or clarifications from the committee. So first, this bill will eliminate the concept of throwback sales. Currently, when a taxpayer prepares their Michigan income tax return, their Michigan income tax base is computed with the inclusion of income received from flow-through entities. The portion of the income subject to tax in Michigan is based upon the percent of sales that the entity made to customers in Michigan. Under the current law, if the flow-through entity sells to customers outside of Michigan, but that entity is not subject to tax in that state, then all those non-Michigan sales are considered Michigan sales if they came out of the state of Michigan, so if they were shipped from here. As an example of how this works, if let's say a furniture manufacturer sells furniture from its business in Michigan, then that business has a part-time employee, say in Illinois, who maintains their website. And that business ships all of its goods through the U.S. Post Office to customers throughout the U.S. We can assume that, let's say, $1 million of its sales are in total, 25% of those came from Michigan, and 750,000 of those, 75%, were shipped to customers in Indiana. Although only 25% of the sales were to Michigan-based customers, the way that our current law works, 100% of their sales are going to be subject to tax in Michigan because the law treats 100% of those sales as being Michigan sales, even though 25% were only to Michigan customers. If the business were a C corporation, however, that same business, same facts, same everything would only be taxed on 25% of its sales, the amount that were made to Michigan customers. This bill would eliminate that discrepancy. The second thing the bill does is it revises the treatment of how a company that generates service revenue would source its sales to Michigan. The changes in this bill will affect how the percent of income is subject to tax and how it's calculated. Generally, states will use one of 2 methods to determine when a sale is in its state. One way is called the cost of performance. And the general concept is that under this method, a service business looks at where the costs to generate its revenue are located, and wherever the preponderance of those costs are, that's where the sale is sourced. So, as an example, if 40% of costs were incurred in Michigan, 30% of costs were in Ohio, and 30% were in Indiana, the preponderance of costs, the greatest of those costs, 40%, is in Michigan. So all the service revenues that were worked from Michigan are sourced to Michigan because the preponderance of costs are in Michigan. This is how our law works today. The second way that sales can be assigned to a state is referred to as market sourcing. And that looks to where your customer receives the benefit of the services you're providing, which is how our corporate income tax law now works. Under this methodology, a business assigns their sales to where a customer receives the benefit of that service. So in my earlier example, where only 25% of customers were in Michigan, in my earlier example, where only 40% of the costs were in Michigan, 30% were in Ohio, 30% with Indiana, that becomes irrelevant. We look at where the customers are getting our benefit. So if only 30% of our sales are in Michigan, under this market sourcing state, if 30% of our customers are getting a benefit in Michigan, 30% of our sales are in Michigan. So it now looks to where our customers are. When we have a situation where we are now in Michigan, where we are on a cost of performance methodology, and all of our neighboring states are on this market sourcing methodology, we end up in a position of double taxation. And although there are some mechanisms to provide relief to taxpayers, it doesn't always fully provide 100% relief. As an example of that, if a Michigan-based technology company generates $1 million of revenue from a customer in California and $1 million of revenues from a customer in Michigan, then 100% of that tax on all revenues would be, 100% of those revenues would be taxed in Michigan, and only 50% of those would be taxed in California, right? 1 million of the 2 million. So in total, 150% of revenues are subject to tax in our current regime. House Bill 5484 would eliminate this discrepancy and ensure that we are only paying based upon the amount of benefit that our customers are receiving in the state as compared to everywhere. Third and finally, this bill will clarify and update how tax on the sale of a flow-through entity should be computed. Over the years, there's been a lot of confusion on whether the sale of a Michigan-based business should be taxed solely in Michigan, if it was domiciled in Michigan, if it should be taxed only in the state where the business owner resides, or if there should be some proportion of the sale taxed in the state. Some of the confusion lies within available guidance and outdated technical concepts, and other confusion lies due to court decisions and interpretation on applicability to other taxpayers of other tax types. This bill would eliminate the confusion by clarifying that the gains and the losses from the sale of a business are taxable in Michigan based upon the percent of activity that the underlying partnership had in Michigan. For example, if the underlying partnership generally had 10% of its sales coming from Michigan, then only 10% of the gain would be subject to tax in Michigan. So with that brief overview in mind, I welcome any questions from the committee. Thank you.
Any questions from committee members?
This is the old rule: if you can't impress them, baffle them. You know,
Yeah.
to make it to try and put it as simply as possible, and as Bob started out, and I appreciate Elizabeth being here because her technical expertise was certainly needed. We're just trying to apply rules that are already used in this state for C Corps. We're just trying to bring the state's rules up to the 21st century for all of the other types of businesses.
Right.
That's really it. It simplifies it. It can reduce exposure to double taxation, and makes it easier to file, comply, and pay the right amount of tax. In some of these businesses, flow through or pass through entities that have sales in multiple states, they could be facing a different tax burden year after year. Every year becomes a one-off based on the work product of that particular year. So we're just trying to apply the C Corp standard that's in place right now and make it simpler for everybody.
All right. Rep. Carter.
Since you look my way. Thank you, Chair.
Yeah.
Why wouldn't they file as a C Corp in the beginning to have this benefit, if you will?
That is a very good question. And one, I practice in state and local taxes exclusively, but there are some significant differences between how you would be taxed from a federal income tax perspective as a corporation or partnership where all the income goes on your personal income tax return, as opposed to a C corporation where everything is taxed at the entity level. So I know there are some significant tax impacts of making that decision, as well as some significant legal liability decisions, but and I'd have to defer to an attorney on some of those finer points.
Yeah, thank you. And one follow-up, please.
Yes.
So I can understand that when you you may start out small, and as you grow, is there an opportunity to switch or transition, or would you have to refile under another company name? I'm just asking questions that I'm probably going to try to get the answers to before we vote or anything.
There are opportunities throughout the life cycle of an organization to change how it is legally and structured and how it is taxed. But there are a lot of different ramifications that do come from that, so it's very much a facts and circumstance kind of analysis with your attorneys and your CPAs.
And in general, and under the IRS rules, and this is dangerous when I'm telling you about IRS rules, but there's an S form and there's a C form. And if I'm organized as an S corp, personally, I would be reluctant to file as a C corp for whatever reasons might pop up in the future. But I think it just in general, that's because who knows how it could come back to bite you later on. So let's just put them on the same playing field. That's all we're asking.
Any other questions? Great testimony. The one key thing that I heard was one way gets taxed this way and the other gets that, and corporations are the ones receiving the benefit or the less tax burden than the other. So equal an amount makes a lot of sense, and I appreciate your testimony. You're right, it was very technical, but she knows her stuff, so it's good to hear. Any other? All right, we do have one card. Adam Majestic from Detroit Regional Chamber supports the bill, not wishing to speak. All right.
Thank you very much.
Thank you. Goodies.
And we're back. We'll stick on the testimony theme right now. You want to move along to, what do we got next here? 5497, Representative Schuette. We've seen a lot of people not want to sit right next to him. So
It's a common occurrence,
That's
yeah.
perfectly understandable. It's not uncommon.
Did take a shower this morning and use deodorant, so, yeah, for the record.
Mr. Chair, for the record, I only sit next to him because I have to. So,
Assigned seating. Yeah, you should see caucus. Well, thank you, Chairman Tisdel and members of the Finance Committee. I'm here to testify on behalf of House Bill 5497 that primarily makes two substantive changes for credit granting institutions, also known as lenders. So it allows lenders who are physically located in Michigan to have a policy stating that the lowest mortgage loan they offer is $50,000 instead of what it currently is at $10,000, but it still allows other lenders to offer a minimum below $50,000. And it allows lenders doing business in Michigan to have a policy that their lowest home improvement loans start at $5,000 instead of $1,000. Again, still allowing lenders to offer a minimum below $5,000. So for many lenders, the current minimum loan amount results in a loss given the fixed costs that require to originate a mortgage. And these loans are often subject to federal high cost tests which come with additional restrictions. And further, when we eliminate the requirement that these minimum amounts apply to only lenders physically locating in Michigan, our Michigan-based lenders can now compete at a more level playing field like those lenders who are incorporated outside of our state. So from a consumer standpoint, it's safer to explore other loan options for small dollar loans, such as a personal loan, rather than putting your entire home up as a collateral. And I think the current minimum loan amounts, they've not kept up with housing values or with inflation. And the minimum loan was established over 30 years ago. Housing market has changed a lot. Inflation has changed a lot. And this legislation provides a mechanism so a future legislator 30 years from now won't have to come and ask for the same change. So I have here with me today Allison McLean with Rocket Mortgage. At your permission, Chair Tisdel, she'll provide some additional details.
Certainly.
Good morning. Well, thank you, Representative Schuette, for the introduction. Thank you, Chair Tisdel and members of the committee. My name is Allison McLean. I'm a Director of Government Affairs with Rocket Mortgage, and we appreciate the opportunity to be here today in support of this legislation. We think it's important to update the current minimum loan amount for primary mortgages as well as for home improvement loans to account for inflation. We were founded in 1985, and Rocket is a Detroit-based fintech platform. Of course, we're best known for providing residential mortgages to clients here in our state and in all 50 states. But our mission is to help everyone home, and we have won more J.D. Power awards than any other mortgage lender, both for servicing and origination. Currently, Michigan has a unique requirement that prohibits credit granting institutions or lenders from setting a minimum mortgage amount above $10,000 and a home improvement loan above $1,000. I think it's important to point out that Michigan is the only state with this required minimum loan amount, or with any required minimum loan amount. This dollar amount, as Representative Schuette pointed out, was established over 30 years ago without a mechanism to increase it for inflation. It poses a challenge for lenders in today's market who often have to provide these loans at a loss. In the current environment, federal high-cost thresholds are challenging to avoid due to these small loan balances and the associated fixed costs of originating any mortgage. This legislation would update that minimum loan amount to $50,000 for standard mortgages and $5,000 for home improvement loans. It would also provide a mechanism to adjust the figures going forward at the rate of the Consumer Price Index, but doing so every 5 years. With the expansion of the financial services industry, specifically fintech companies, consumers do now have vast options for obtaining small dollar loans outside of the traditional mortgage market. As Representative Schuette pointed out, these other options may also be a safer choice for consumers to avoid using their home as collateral for such a small dollar loan. Finally, I'd like to highlight that changing the minimum loan amount would not require that lenders provide these loans at such a small amount, but they would still be able to if it makes sense for them. So this would still be an option, and there will of course be a market for some of those lenders who do want to provide these loans and see a market need to provide those loans. That concludes my testimony, and I will pause for any questions.
We do have a question. Representative Martin.
Thank you, Mr. Chair. So you mentioned the CPI being tied to CPI, and I heard you say something about 5 years. Is there an oversight mechanism for legislature to look at to see if this is working? Is there a way for us to make sure that it's controlled, or is the proper mechanism for growth in the mortgage business?
So yeah, we're working on that sub that would have the 5-year adjustment for the CPI. I think the Consumer Price Index is a federally calculated statistic that measures the growth of inflation. I know it's not directly tied to housing, but certainly if we thought that it was not keeping pace in the
but
required amount.
You're using a moving window of 5-year CPI.
Yeah.
Is there a way for the legislature to look back at that at some point, any type of sunset, so we know that it is actually still appropriate for what we're trying to do here?
We could have discussions about that. There's not currently in the legislation, but I'd welcome up a discussion.
Just a mandated increase without oversight by the legislature seems that we would want that in there. Thank you.
Okay. Yeah.
Representative Young.
Thank you, Mr. Chair. Thank you, Rep. And Allison for being here today. So I know I talked to someone from Rocket about this legislation before. In Detroit, we have that unique program, right? The land bank. You can buy a home for $1,000, $2,000, and then take out a loan for $25,000 to actually fix it up and make it livable. People are doing that. It's one way for home affordability. We already know the cost of trying to afford a home. And so I heard you say that even though the amount will be increased to $50,000, there could still be potential for somebody to get an amount less than that.
Absolutely, yes. Just to clarify, this would just provide an option. Some lenders, especially out-of-state lenders, as we pointed out, do have internal requirements where they do not lend below $45,000. And in-state lenders are still required under this law to provide those loans below $45,000. Many lenders would still see this opportunity to provide loans at that amount. I think when we did talk previously about this bill, you were interested in data around how many loans we've seen in Michigan around these thresholds. And we were able to provide some of that from the Federal Home Mortgage Disclosure Act. We've seen, I'm not exactly sure about the numbers for your district, but we have seen across Michigan in 2024 about 3,300 first lien loans around this amount. I will correct myself, not first lien loans, 3,300 total loans, and about 81% of those are for second liens. So the remainder, or about 600, were for first liens. So there certainly will still be some interest from folks who do want a mortgage at this lower amount, and we do think that lenders will stand up to provide that, especially lenders with lower overhead costs, and some of the smaller lenders will still be able to make those loans.
Okay. All right. Thank you for that.
Anything else? Well, we have one card to read in. Patricia Herndon, Michigan Bankers Association, not wishing to speak, but in support of the bill. Thank you very much.
Thank you.
We'll move along to voting. House Bill 5318. And we have an H1 substitute for that. That is Vice Chair Frisbee's bill. Would you like to discuss your H1 substitute, please?
Pretty simple.
Pull your
Pretty simple language is provided there, mostly technical, but the consumer price index becomes the major driver as well. So instead of every few years coming back, like Representative Schuette just said, it would drive this process forward.
Okay, and I do have some cards to read in. On 5318, Dan Boehm, Education Advocates of West Michigan, not wishing to speak, opposed. Jennifer Smith, MASB, not wishing to speak, opposed. John Severson, Michigan Association of Intermediate School Administrators, not wishing to speak, opposed. Andy Newman, Michigan Education Association, not wishing to speak, opposed. Judy Allen, Michigan Township Association, not wishing to speak, opposed. Matt Schuler, Michigan Association of Superintendents and Administrators, not wishing to speak and opposed. Would you like to move to Vice Chair Frisbie moves to adopt the H1. Call the roll, please.
On the motion to adopt the H1 substitute, Chair Tisdel,
Yes.
Representatives Frisbie,
Yes.
Vanderwall,
Yes.
Leitner,
Yes.
Martin,
Yes.
Posthumous,
Yes.
Alexander,
Yes.
Aragona,
Yes.
Schuette,
Yes.
Hoskins,
Yes.
Carter,
Yes.
Neely,
Yes.
Green,
Pass.
Young,
Pass.
Pies. Mr. Chair, you have 12 yea, 0 nay, 2 pass. The motion prevails.
Very good. And now we'll move along to, I'll have Vice Chair Frisbie move to adopt or report his with recommendation as H1, 5318. Go ahead and call the roll, please.
On the motion to report as sub H1, Chair Tisdel,
Yes.
Representatives Frisbie,
Yes.
Vanderwall,
Yes.
Leitner,
Yes.
Martin, Posthumous,
Yes.
Alexander,
Yes.
Aragona,
Yes.
Schuette,
Yes.
Hoskins,
Pass.
Carter,
Pass.
Neely, Breen, Young, Pies. Mr. Chair, you have 9 yeas, 0 nay, 5 pass. The motion prevails.
And that moves with recommendation. How about Vice Chair Hoskins moves to excuse all absent members? Nothing else before this committee. We are adjourned.